And I thought, man, I'm pretty smart. I've got this thing figured out. Went over to the house and he had torn out the ductwork and it was a marijuana grow house. And
Ooh.
man, every door had like the number of plants written on it.
Thank you for checking out Real Talk Personal Finance. Shit's about to get real. Cash Flow King with you today. In today's episode, we have another Pod Match guest that I'm very excited about. For those of you that have listened to the show for a while, you know that we talk about real estate quite a bit on the show. So today we have coming to us a real estate investor who is also a property manager. He's an investor himself. He's hands-on with his company, which I'm sure he'll tell us all about. And it'll be really interesting to get his perspective on some of the different things that we talk about on the show. So please welcome to the show, Cameron Tope. Cameron, thanks for being
Yeah,
here.
man. No, appreciate you having me on. Looking forward to it, getting into this.
So I was reading through your bio a little bit, I guess for my sake and the listeners as well. Catch us up on, I think you started off in oil and gas back in the day, and there were some things that kind of changed your mind about how economics might work as far as, you know, finances go. And so you kind of pivoted a little bit, and now you have a bunch of units. Kind of take us through your journey.
Yeah, high level. I'm originally from Southern Ohio, blue collar family. Parents were like, "Hey, don't do what I did." My dad was a contractor. My mom was a massage therapist. She never made more than $14,000 a year, and so they pushed me to go to school. Their big thing was like, go get a safe job. They thought it was safe. So I started looking around at engineering jobs and found a petroleum engineering program at Marietta College. And the only reason I went there is because it was 100% job placement. So that took me down to Houston and I got a full-time gig with British Petroleum. But man, as soon as I started, like within a few months, oil went from like 100 and some dollars a barrel down to like $30 a barrel. And
Wow.
people were losing their mind. Yeah, it was.
Yeah.
And as a petroleum engineer, it's not like you're a mechanical engineer or a chemical engineer where you can, maybe pivot. It's like, oh my God, this is it. This is what I went to school to train to do. And so I saw people like lose their mind. Like, I had $40,000 of student loans, but there were some old timers who were just Joe Cool. They weren't stressed. They weren't worried at all. So I was picking their brains and they're like, well, over the years, I've just picked up some real estate, had a decent stock portfolio, picked up some rental properties. So they're like, hey, this happens every, decade or so. So we'll write it out. Maybe we'll get a severance if we're lucky. And then they'll call me, in the next 6, 12 months and I'll come back to work.
Yeah.
And so that was the impetus. I was like, oh my gosh. So I started reading everything. And I'm sure your listeners have heard of Rich Dad Poor Dad.
Oh, yeah.
And yep. So that fell in my lap and it was like, okay, game over. And I just, wanted to accumulate assets and figured that out. So that just really opened my mind. And then I was like, let's do this. Started buying rental properties, got up to, I think it was around 7, somewhere in that range, and looked for a property manager. It was either a guy driving around in a truck or a huge multi-state company that, outsourced everything and didn't have any real local knowledge. So that's when I was like, okay, I'm just going to do this myself. Had some family and friends say, hey, Cameron, do you mind manage my 1 unit or 2 units? And then I had probably 20, 30 at the time between friends, family, and my own. And I hired somebody. And in 2020, I left BP full-time or left BP from the full-time work and did this, started Emerson and really started looking at third-party property management. I mean, it was kind of a proof of concept when friends and family were coming to me like, hey, we like what you're doing. Would you do it for us? And then really, like I said, turn it on in 2020. And today we sit at about 300 properties across the greater Houston area that we manage.
So you were still working full time at the time that you kind of dipped your toe into this then, right?
Yeah, and I just got lucky, man. I just kept bobbing and weaving from the layoffs. And so in 2020 was really like the big impetus where I had accumulated enough. I had my about 30 properties at the time. And so I was like, I'd replaced my income and they were offering severance packages. So I was like, you know what? I'm going to raise my hand. And that was an optional and they had to approve it. But I was like, okay, I'll raise my hand, see if I get picked and maybe this will be the perfect time. And it just worked out that way.
Gotcha. Yeah, that's awesome.
Yeah.
So, all right. So let's see here. When you first started buying? I guess let's talk about this for a little bit. So,
Yeah.
how did you go about it? Were you like trying to find sort of the ugly house that needed a complete gut job and rehab? Were you looking for something that was fairly ready to go, rent ready, turnkey? Like, what were you looking for, and how did you actually get started buying your first initial properties?
Yeah, the first property I bought was an owner occupant that I turned into a house hack. So when I was reading the books, I was like, oh my gosh, house hack is a perfect way to get started because you could use your cheap financing. I ended up using the FHA loan with 3.5% down. So I think I was out of pocket somewhere around $10,000 when it was all said and done. And I rented the rooms out to some guys at work. Some of these guys, at one time, my brother moved in for a little bit, but these guys would be off on hitches or maybe just be in town for, Monday through Friday for a couple weeks a month. And I'd rent the room out 400 to 500 bucks for them. And it almost covered the whole entire mortgage. And so that was like the first rental property, or technically, I guess it really wasn't technically a rental, but my first investment property. And then from there, I was like, oh my gosh, this is amazing. The interest rates at that time in 2013, 2014 were super low, 3,
Yeah.
4%.
Hmm.
And so I was like, okay, how can I keep doing this so that I can get a big enough portfolio where I can make, if I'm making 5, 10% on, a several $1 million portfolio, that's pretty good money. And that's when I started really looking into the discounted properties, like trying to do, when you buy below market value, you immediately get that equity gain. And that's when I started buying below market value and using the BRRRR strategy. So that buy, rehab, rent, refinance, repeat. So buying them, fixing them up, then doing a cash out refinance, getting all my money back. And in 2017, that was the year that I was buying a property about once every 6 weeks. So I started in 13, but it really took me almost 4 years to get my footing, build up the network and contacts, and really, pour gas on the fire, for lack of a better phrase.
So you stuck to, I guess, your local market as you were doing this, right? This wasn't like an out of state thing for you.
100%. And I would advise, everybody's got a little different story, but I would say for the majority of folks, stay in your backyard. And the reason for that is it's so much easier to go walk down the street or just go drive the neighborhood, look at some ugly houses, or you're like, hey, this neighborhood rents well. Let me just go drive and see what it looks like. And so when you go out of state, you really have to have a super strong team. And I think, man, I've heard of property managers. This happened, actually, I just read an article, it was probably last month, that one of the property managers had embezzled about $500,000 from investors, or from a few clients. And what they were doing is they were saying the property was vacant and it was really occupied, and they were taking the rents and
No.
pocketing them.
Wow.
So it's like stuff like that where it's like, man, yeah, I mean, people invest out of state and all over the place, right? But you really have to have a strong team if you're going to do that. And I think an easy way to get started, well, and let's even say you don't need a huge 30 door portfolio like I have to retire. You need, maybe 5, 10 doors, at max, depending upon your market. If you're in a super expensive market, you probably need less than that. But the average Joe and Jane with just a handful of doors can really change the trajectory of their life, or retire a spouse or change a career or whatever it might be. So I think starting in your backyard is just an easy way to really learn a lot and be able to QAQC, quality assurance, quality control, your vendors, your team, and really just cut your teeth.
Yeah, I would agree with that. I mean, my approach has been a little bit different, and I have a lot of friends here locally that they do a lot of a couple of them are home builders, so they're essentially building their own sometimes, but they're they like to invest in locally. But for me, I am not handy in the slightest, and so I was like, there's no way that I can do this. And I know, and you may have been on there at some point, you may still be on there. Bigger Pockets back in the day was kind of how like I started learning about different things, and I'm reading
Yes.
different things, and I'm just like, I don't know that I can do this. I don't know that I want to do this. Not that there's anything wrong with it. It's just not where my skill set is. I had a conversation with somebody a couple months ago, and they said they literally had their two hands in front of their face, and they looked at them, their palms, and then they rotated them and flipped their hands over. There were a few of us sitting there, and he's like, what I just realized is that I have never made money not using these two things. And my first thought was,
Yeah.
holy shit, like have never made money using my hands, right? So everybody's skill set is a little bit
Yeah.
different, but 100% agree on the team. And so in my case, and the listeners may know this, but I know you just started listening to the show not too long ago, so you might not have heard this or be aware of it, but I would go out and visit these different groups that would sell turnkey to investors, and I walked away from almost every single one of them, with the exception of one particular group talking about the team that has a very well, in my opinion, of course it's biased because I'm an investor there, but a very well-oiled machine, and they have systems which we might get into. I noticed that was something else that was on your profile, and you mentioned it was important, and I agree with that. But it's all about the team. So even for me, even though it's not in my backyard, quite frankly, for me, that's probably a good thing because I can be type A and anal and I don't want to drive by it. And even if I do, I can't fix it. But the team is absolutely important. And I've had, another property management company that we worked with in that same area that I bought kind of a one-off from them and put that under, the management company that pretty much have everything else with. And I've been very, very happy. The property performs way better now than it did before. And I really do believe that that's due to the management and the team and things like that. So I guess we can maybe transition into talk to us a little bit about the importance of systems and things like that. I noticed too, and this is kind of I know I'm all over the place, but I was on your website earlier and you have a bunch of guarantees, which I thought was interesting. You normally don't hear about that from other companies, and the one that I work with, they have a few of them, but nothing major. So I would assume that kind of ties together because you probably have to have certain systems in place in order to be able to offer certain types of guarantees. So just kind of, color it in for us and walk us through what does that look like and how do you, big picture, look at all that together?
Yeah, 100%. I want to touch on one thing that you mentioned about being in the backyard. When I say that, I more mean for the newer investor to get acclimated to the market, to understand their market. I did not do the work on my houses either, but I think it's just one of those things where when you can go drive the neighborhood, it allows you, especially a new person, to conceptually understand the neighborhoods where when a property does come up, in the late teens, properties were flying off the market. I mean, we were in inventory shortage. Now you've got a little bit more competition, but when you see a good property come up and you're like, oh, I know this is Main Street, it's south of 15th, this is right where I want to be, boom, and you can act more quickly versus relying on somebody. Again, not that you shouldn't have a team, but it takes a little bit of time to build up a team in another market. It might be a little bit more due diligence on your end and just having to go through a little bit more. But in your backyard, you can kind of maybe get the market down first and foremost, because every market, like you mentioned, is a little different. You have some areas that are a little more cash flow intensive, appreciation focused, maybe good for short-term rentals or furnished apartments versus, something that, just a long-term single family rental. But yeah, I just want to clarify that. So as far as our guarantees and our systems, once you get at scale, so when I had 5, 10 properties, I'm doing one turn a year. And I might, I thought I would do the greatest screening process in the world. I'd never have to evict anybody, but you might evict one tenant every 5, 10 years. But when you get scale, when you have, several hundred properties, you can spread the risk out. So we are able to take some of the, the risks that we have in some of these areas or some of these properties and spread it out amongst the owners. And we're also able to get a much higher learning curve. So again, you do one turn, maybe every year, every few years, our tenants say on average 3 to 4 years. But even if you're really sharp and learning everything on every turn, you're only learning once every couple years. Whereas for us, we're doing about 10 turns a month. So we're improving these processes. We have what we call after action reviews after evictions, after broken leases, after every turnover, after mistakes that happen, and we're updating the process so we can just build a better system. So we've got everything dialed in where we know, that we evict just under 8 out of every 1,000 tenants we place. We know that we've leased properties about in the mid 20s, 24 days last month and 22 days the month before that. So we're able to offer these guarantees instead of just saying, Mr. and Mrs. Owner, we can definitely rent your house under 30 days. No problem. Don't worry about it. It's like, well, actually, we're going to be aligned with you on the same side of the table. And we're going to say, Mr. and Mrs. Owner, we guarantee that. So we will implement that with either $1,000 towards an eviction or months of management discount. But I really structured Emerson. I didn't start out wanting to be a property manager by any stretch of the imagination. It was more like this morphed into a company that I felt had a need in the market. and or the market needed. It was a gap. It was a huge gap, and so I think you'll see a lot of the stuff on there is really owner focused. And I was actually making a decision with the team yesterday. We were talking about it. I said, guys, this is not a great business decision. If I was just simply on this business, it would just be this. We would go this way, but it's the right decision for the owners. This helps out the owners, so we went left instead of right. So that's why we did those guarantees. It's because we have the data, the information, and we have the system that produces a very likely result. I can't guarantee, that you're never going to have an eviction, but I know it's very unlikely. And if you do, we're going to able to share some of that financial burden with owners.
Yeah, I mean, that's huge. I mean, I'm looking, I think I pulled it back up here. I mean, just to rattle off a few, you'll probably be better at this than me, but 90-day risk-free guarantee, monthly agreement guarantee, 30-day lease, tenant placement, vendor labor, eviction, I mean, pet damage. Like, it's, I've never seen anything like it. That's amazing that you guys can do that. Now, if you don't mind me asking, from an economic standpoint, though, I noticed some of them say, like, there could be an additional cost or whatever to the owner. I would imagine that, yes, it's good to spread it out for the owner, but there has to be a economic incentive as well, right? Like, you guys are obviously profitable, or you wouldn't be in business, but those things do bring in, it's good for everybody, I guess is what I'm trying to say. It's good for the owner, but it's also good for the firm, right?
Oh yeah, 100%. And I think there's some companies that'll pull those out. All those, they'll break all those out, or at least like the tenant placement guarantee, the eviction protection. They'll say, hey, we'll do that for $5 a month, $9 a month. And so they have their base management service, and then they start adding all these things on. And next thing you know, you're paying 50% more for your management. So we're smaller, right? We have about 300 properties, and that is technically a small management company. There are companies with thousands
Yeah.
in certain markets. So we don't have a huge corporate office. We work remote. We're Houston local only. We don't go anywhere else. So I think we're able to offer to do some things that are a little more streamlined, a little less overhead than some. But the only one that you see on there that's an additional cost is our tenant damage protection, and that's $29 for 2,500. But the pet damage guarantee, the tenant placement guarantee, which we release at our expense, the eviction protection, the 30-day lease guarantee, all those are covered. The vendor labor guarantee, all those are covered under your service.
Gotcha. Okay. And just out of curiosity, on the tenant
Yeah.
damage, is that a monthly thing, the 29?
Yeah, correct. Yep.
Gotcha. Okay. Yeah. I mean, that's still great. I mean, we just had a turnover in one of our units, and I think after it was weird how they put it on the ledger. And this is a firm that manages. They're probably between 5,000 and 6,000, mostly single family. They got a few duplexes in there, but homes. They put it on there. I think they returned the tenant security deposit, and then all of a sudden on the ledger they had a journal entry for essentially reimbursing it to me as the owner, because I think they realized later, like, oh, actually, there's some things that the tenant should have been responsible for. But I guess I say all that to say that the turn itself, which is probably on the lower end of the spectrum in terms of cost, still cost me net probably about 2,200, something like that, which is pretty low. I've heard of people well into the five figures or more on tenant turn. So that's stuff that, I mean, no matter what, it's going to come up, and there's definitely a cost associated with it. So I think that could definitely be attractive to some folks. So yeah, that's cool that you guys do that.
Yeah, we just found, we get our clients come over to us, especially with the larger companies. It's like, if they do a $1 a month increase, that might be, and they have 5,000 units, that's $5,000 extra in somebody's pocket.
Right.
For us, it really doesn't move the needle. So it's not like that's some of the feedback we get was like, well, we really like your simplified structure. There's nothing hidden, versus like, man, I'm getting a technology fee and an accounting fee for this. And it might be small, but it feels like death by a thousand cuts. It's like, oh my gosh, $3 here, $5, like stuff adds up.
Right. Yeah. I feel like it's the same way kind of with, and this is kind of random, but like, certain tax advisors out there, like they'll be, okay, this is our price for tax preparation and tax planning. It's an all-included price, and you can call or email, essentially, as long as you don't abuse it, with an unlimited number of questions within reason that you have, versus the tax person that says, well, you sent me an email and I had to research this for 15 minutes, so here's an invoice. You know what I mean?
Exactly.
It's kind of like the same thing in a way. So yeah,
Yes.
that's funny. All right, so let's see. What else should we be asking you about property management? How about if we have listeners out there that maybe they got a handful of properties and maybe they're self-managing and they're on the fence about, do I continue to self-manage? Do I want to bring on, third-party property management? Like, what would you say to them?
I think it really depends on your scenario. When I was 22 and ready to set the world on fire, and I had, my 5, 7 properties, or I was building that, you couldn't, somebody could have said, I'll give it to you for free, and I wouldn't have taken it. So I think it really depends on where you're at. If you have one, again, in your backyard and you're okay with the risk, you understand it. I think some people go in with this, glass half full mentality and hope that nothing happens. And if you smoke that hopium, bad things do happen.
Yeah.
And, so I think you just have to understand like, hey, the Texas, I'll speak for Texas. Texas property code changes every 2 years. So I've seen leases from real estate agents. So people who have continuing education, who are, savvy in the market, whose leases are wrong, who are charging late fees that are not to the new code. So there's just a lot there that I think if you want to stay on top of it, and it's like, hey, listen, I'm going to buy this one house, or I inherited this one home and I really want to stay in it and it be attentive to tenants and stay on top of the changing property code or changing requirements. And the laws are changing all the time. I mean, that's something that we do. We meet with an attorney annually at the end of the year to go through all our tenant qualifications, to go through all of our addenda and lease agreements, because things are just changing too quickly. One state has a new case law. You can't evict a tenant or you can't not renew a tenant, and boom, it moves over to maybe a city ordinance somewhere else. And it's like, oh my gosh, is this going to move over to a state regulation? So there's just so much with that. But I will say, I don't try to fear monger. I think, majority of the time, rental properties and rental property investing is the most litigious part of real estate. Security deposits are the most litigious part of property management, but it's like it doesn't happen very often. As long as you're doing things the right way, you're taking care of your tenants, you're being responsive. You can't always get, somebody can sue you for anything. I could sue anybody for anything, but is it going to hold water? Probably not. So it's just, your risk appetite, how much you're going to stay on top of it. And then how much time do you have? A lot of our clients will come from, some blue collar jobs, some white collar jobs, or they're being relocated and they're like, listen, I don't want to deal with it from 1,000 miles away. And then investors that come to us, similar like the experience you were talking about, they'll come to us and say, okay, I was doing this, but I'm taking my eye off the ball because I'm focused on buying more properties, or I'm focused on this flipping business or these developments. And so they kind of take their eye off the ball of their property. And they're like, okay, a renewal is coming up. The tenants have been good. I haven't heard from them. I don't want to, I'm not going to disturb them. I'll just leave the rent as is. Well, you do that over your portfolio or over many years, you're looking at a substantially different return. So I think if, we lease properties faster than on average as well, the HAR, the Houston Association of Realtors, they lease right now in about 47 days, I think was last I saw. And I mentioned we're doing it in 22. So if we can lease a property 3 weeks faster, we're saving the owner, thousands of dollars on an average price point property a year. So that kind of almost pays for our management service.
Yeah, no, that's a good point. And a lot of people don't see it that way, or even some people I know personally, they get hung up on, well, this is what the market rent is. Well, is it really if you can't get it filled, and how much money are you losing by holding it at that instead of maybe coming down just a little bit, or different things like that.
Yeah, it's the time. It's like, well, they might, the market change has been changing a lot more recently in the past few years than it has, in the late teens. So it's like, are you staying on top of that? If you're out of the city and you're not staying on top of like, oh my gosh, they just had a new development over here. So our days on market are going up. So we need to maybe get down in the price a little bit to get ahead of this before we're competing with 35 other properties that are actively listed, which, again, just basic supply and demand. Supply goes up, that price with the same demand, that price is going to come down.
Yep, exactly. You had a piece on here about why most rental properties underperform and how to fix it. You got any comments there?
Yeah, I think the biggest thing I see is the sense of urgency. So you were talking about, potentially what a individual should do, or should they hire property management, or what I would say to them. But I think most people should try it themselves. There's there's not really a large harm. You hire an agent, you get them to put you on we call it Texas Association of Realtors here, but a TAR lease, and that's been reviewed by attorneys and whatnot. So you almost get that for the leasing fee that you're going to pay them. That's really the meat and potatoes and the qualifications. So you start there. It's a solid process with hopefully with an agent that is super experienced. I guess let me back up a little bit and even say, if you're newer, don't go out and find other newer people to work with. It's the blind leading the blind that way. You need to find super experienced leasing agents, super experienced property managers, super experienced lenders, because these are the people that are going to teach you how it goes. If you're just doing it with a bunch of newbies, you guys don't know the tricks of the trade and what's a risk. Just because you don't know it's a risk doesn't mean it's still not a risk.
And they also have a network too, right? Like they can refer you to other people that are rock stars.
100%. Eagles fly with eagles. So it's like, you go when you're just with a bunch of new people, you guys might be all ambitious and you don't feel intimidated because you're all on your first couple deals. But you guys have to, if you're going to build out a team, I just strongly advise finding people that are, 10, 15 years in the business and above, because they've seen it 100 times. They can tell you, listen, you can do that, but you might not want to for these reasons. So I think there's a lot of value that you can get from just getting with people who are experienced. But to back up to why most properties underperform, I think it's a sense of urgency too. I say vacancy, and I preach this to our owners and as much as I can, vacancy kills cash flow. It is the silent cash flow killer. As soon as you buy a property, we have had people literally call us on Fridays and say, hey, I just bought a property today. Would you manage it? We haven't had an initial consultation. We haven't had anything. And I'm like, sure, but we'll try to get in next week. We need to do a call. We've got all this information we need to get from you. And so they're already behind the eight ball.
Yeah.
What you should be doing is, okay, I know closing is going to be on the 15th. Okay, I'm looking for my team, or well, hopefully you already have your team in place, but I'm getting ready and getting the contractors lined up or getting my property manager lined up 2 weeks before that, so that when it closes, I can hand those keys over and go. Because again, if their average price point in your market's $2,000 a month, and that property sits vacant for an extra 2 weeks, you've lost $1,000.
Yeah.
And you don't notice it till the end of the year. And when it goes to the end of the year and you're like, man, I just got a check for property taxes. Why don't I have any money left in my account? And it's vacancy. It's like, well, and then I need to get with an agent, find an agent who's going to list the property, and you take your time, and man, 6-8 weeks of vacancy will kill you. And I've done it. And so if there's anything that a new person can take away is when you buy that property, get as much lined up as you can. I like to say, and again, a lot of this is Houston local, but you're losing about $100 a day. By the time you factor in your mortgage, taxes, insurance, utilities, lawn care, the list just goes on. You're losing about $100 a day. So that's why I always tell people to have a sense of urgency and get that vacancy down, get a good tenant in there ASAP.
I've heard people say you should go to the property management company and basically say to them, hey, I know you manage property in this area, assuming you want somebody to manage your properties. What do you think I should buy? What neighborhood should I be looking at? What would you like to manage? You ever have investors do that?
Yes, and that is it is saved. Actually, we had a couple investors from California who were doing a 1031 exchange. So they were selling a 7-figure property and bringing it over. And they said, hey, we got hooked up. We got referred from an agent. And they said, what do you think about this area or this area? And I could pull the comps and say, oh, we just leased a property down the street in 14 days there. We do like that area. Or, hey, this is a new build development neighborhood. There's a lot of inventory here. So you're seeing days on market creep up. So listen, this might be still a long-term play. You guys aren't too worried about cash flow, but I think just be mindful that the 30-day lease guarantee, we're going to try to get that lease in 30 days, but it might be 40 just based on what we're seeing. So 100%, I think that is a very wise thing. And property managers have, if they have doors, some managers have 5, 10, 15 properties. They're agents that kind of do it on the side. But if they have the volume, then, we have properties that are leasing, every month, and we cover almost all greater Houston, and we have access to the data. So I think that is a very wise thing to do.
Yeah, and you guys are going to know, like you just said, for those reasons, more so than typically the agent that's just doing it. It's kind of a side hustle type of thing, right? So, yeah, definitely go to the source.
Yeah, and listen, you have to be a licensed agent in Texas to manage third party. So I'm an agent and a broker. But I will say, and the agents listening will not like this, but agents get paid at the close. They're not too worried about how you manage that property or if that property is profitable. They're getting a 5-figure check the day you close and they're gone. Good agents will help you and want you to be successful, but there are a lot of agents out there, just like any profession, there's good and bad, but there are a lot of agents out there that once they get that check, they're off in the sunset and you'll never hear from them again. We had a client who came in and this was actually through the winter, and he said his agent said that property would rent for almost $2,000. And we had to have a really serious conversation with him, and a very unfortunate conversation with him to tell him that it was closer to 1,600. So he was actually going to be in the red where he thought he was just going to break even. He was actually going to be in the red. So you want to, you don't go ask the barber if you need a haircut. If
Exactly,
that agent,
yeah, you want to know ahead of time. Yeah.
exactly. And if that agent is like, oh, if all I have to do, and again, I'm not saying all the agents do this, but you just have to think about motivation. They want you to close. After that, if you don't make money, it sucks, but that's not really their problem. They're paid, they're out. So, a property manager will tell you, like, listen, I, I don't want to manage this. It's very hard in this
Exactly.
area to manage. It's a
Exactly.
pain in the ass. There's a lot of maintenance. There's a lot of crime in the area. We do evictions all over this neighborhood. So yeah, they'll be the ones to give you that, or just an independent third party. Go ask another maybe leasing agent that's not involved in the transaction. Hey, what's the rent over here? What are you seeing in this area? And get that unbiased, opinion.
Very good. Property management and asset management. This is something that you hear people say, like manage the manager, things like that. And quite frankly, sometimes I think about myself and I'm like, I don't mean to be difficult, but sometimes I wonder if they think, man, this guy's a pain in the ass, Because, and I'll give you a small example of this, right? I try not to be a thorn in anybody's side, but at the same time, you want them to know who you are, at least in my opinion. And I don't have a huge portfolio. We have 8 homes with them, but essentially, how did this start? There was something that happened where we would get the normal monthly report, and all of a sudden something happened, and I didn't find out about it until looking at the report. Nobody had told me about it, and I'm like, whoa, 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 what do you mean? And they were able to set up like a custom, I don't want to say alert, but like a custom weekly report. So literally every Friday, I just got one a little while ago, every Friday now, I get an email with essentially, a report on where things are, who's paid, who hasn't paid, if they're paid partial, how much, what that looks like, just basic information. But I have like a weekly pulse, and I can log into the portal 24/7 too if I wanted to. But it kind of gives me a better idea. But if there's something that I'm noticing that's not going the way that it needs to be, or like we had one tenant, for example, who just last night, as a matter of fact, finally, and this doesn't happen very often, but finally got caught up and paid the rest of their month for June. Well, guess what? Today we're recording this on July 10th, and they still haven't paid for July, and they just finished paying about a third of the rent in June, which normally we never let it go that long, but this person historically has paid. But I'm on top of it, and I'll email about, what's our plan for this, and, following up about it. From your perspective, do you have clients and owners like that? And is that, I don't know, would that be an example of asset management or managing the manager, or is that just me being a pain in the ass?
Well, I'll say this. So asset management versus property management, that's a very easy one. I look at asset management as strategy and property management as execution. So think about, somebody handling the maintenance request. That is property management. When somebody comes to you and says, okay, listen, we've had 5 issues with the AC over this year. It's probably time. It's 12 years old. It's probably time that we look into a replacement. And hey, let's do that over this winter. I know you're going to keep this property for the long haul, so let's get it done the winter. Prices will be a little bit better. The tenant, we can try to do it between a turn. The tenant, it's coming up on a turn, or hey, we'll just do it over a long weekend or something like that, and the tenant won't be without, won't have to be worried without AC. And so that's the strategic side. Or listen, you had a lot of maintenance with this. It's a good time of the market. Let's get this property sold. Like it might be time to get it sold. And that could be, again, everybody's situation is a little different. So it would be understanding your goal with these properties. Is it for cash flow to leave your job? Is it for, wealth at the end? Are you looking for the biggest appreciation so that you can cash that out and put it into some other venture? And so that's where the asset management comes into play. That is the big difference. And I think you'll see some of these larger, and again, I feel like I poo-poo on the larger companies, but they make it easy sometimes because, and I've called them, like we do our research and stay competitive in the market and stuff. And I've called them, and the people you talk to, like when in a sales call, I'm like, yeah, hey, I've got one of my properties vacant. I did. It was one of my properties. And I talked to the person, they had absolutely no experience, no idea. They went through their questionnaire, very, robotic. And I think that's what you're seeing. Some people call property management. And to me, that is asset management is this next step. It's harder. You have to have experience to know where to guide the conversation versus I just got this maintenance request, get it done. I just got this, check the box. I do the lease renewal. It's like, well, how does this fit into their overall strategy? What is it? Okay, should we be pushing rents a little more aggressively? Or, hey, listen, the tenant's been great. They're very low maintenance. They're not worried about income on this property. So let's just keep that a little bit lower so that everything just smooths out because this tenant's already been griping about this or that. So it's like, instead of just checking boxes and we follow a system, but there's always a little nuance to that. And when we understand the owner's goal and their kind of philosophy with their portfolio, that's when we can really make wise advice and wise strategies. And
Okay.
so that's the big difference there. As far as being a pain in the rear end, I think, I like people who are on top of the properties. I think the people who are keeping us in check, that, to an extent, right? There can't be too many cooks in the kitchen.
Right, right.
But it's like, hey, listen, I didn't see this, or this report wasn't right. Like, that's an opportunity for us to go back and go, oh my gosh, there's something wrong. Because if nobody says anything, then we might just keep walking right off slowly into a slow train wreck, or right off the cliff edge. So it's like, we want to make sure that we get feedback from our owners. We ask about surveys and all that stuff. So no, I don't think that you're being a pain in the ass. I think that also comes up, especially with a new client or a new property manager. Ask all the questions, and a good property manager will be able to tell you the method to the madness. Like, hey, we do this because, hey, we're seeing this in the market, so we're changing our philosophy a little bit, or that's why we're dropping rents a little more aggressively because of this new development, or because you have 25 active properties in the area. And so I think, as the clients that we have that ask a lot of questions in the beginning, I actually like that, because again, we can refine our process a little bit to help answer those up front. And then we create a better system, and then build that trust, so that down the road it's a better relationship.
And they actually give a shit with the fact that they're asking questions, right? Because, when you think about it from that, I mean, it sounds like, it's part art, part science. You blend that together and you get strategy and, hashtag asset management, right? And but you want people that are going to be, like you said, involved, and not, like, I remember the one firm we were with before, for that one house that I alluded to, they were like, thank you so much for reaching back out to us. And I'm like, what? And they're like, oh, we have owners that we call and we send emails to repeatedly, and they never respond to anything. I'm like, what
Yep.
are you talking about? Does that actually
Yep.
happen?
Oh yeah, yeah, 100%. We'll have owners who were like, "Hey, we've got an HVAC system issue or a hot water tank issue," and it's crickets. So there's people that, like you said, we'll hear a little bit from in the beginning, and then you got to think, we had a lot of investors come into the market in the late teens. That has really died off after COVID, because we had that incredible wave of appreciation, and now interest rates have almost doubled, and in some cases tripled.
Yeah.
And so we are seeing a lot more accidental landlords. So they're not like us. They're not looking at this like, what is the return on my property? They look at, like, what I call the ROH. What's the return on hassle? So how much of a pain in the ass is this property? And they don't want, that's why they hire a property manager. They're like, I don't want to deal with it. I don't want to talk to a tenant about anything. You guys handle it. I just don't want to be bothered. So, for us, for you and I in our portfolios, we're looking at, like, what's the return? And then we help investors with that, obviously, but we also are mindful that, hey, it's somebody who inherited a property or moved away, and they just want us to take care of the property, low maintenance, low issues. They're not really worried about a return. If it pays for itself, they're happy, because they got a $100,000 package to go get relocated over to the UK or South America, and they're going to come back in a few years. This is their home. So that's, we have a lot of different investor profiles.
Gotcha. Interesting. How are you guys growing your investor base? Is it mostly referral, word of mouth? How are you doing that?
Yeah, it's agent referrals. That's the big one. So we build a network with agents. We don't do buying and selling. So we have a team. Our team is all solely focused on property management. And the people, when an owner does want to sell, we have our partner, or kind of like platinum agents, that we'll refer that business out to. We'll partner with, whether they want to buy or sell. And that allows us to kind of stay in our own lane. So we can say, Mr. and Mrs. Agent, when that client wants to sell, we turn them back over to you. We're not trying to steal your client. And it seems to work out really well. And we do a lot of education. You mentioned on the website, we give up so much stuff for free. So we try to educate all the agents in the community on what they can do, or property management tips, go to CE and sponsor CE classes, a continuing education, and build a great agent network. Because again, you mentioned, like, eagles fly with eagles. So when they have a great agent, agents are really good and understand the returns, understand what the client is trying to get or what they're trying to achieve. That's when they can say, okay, cool, go with a property manager, or hey, just do it yourself, or I'll handle the other little odds and ends. But the agents that are just looking for a quick buck, we really don't work with that many.
Gotcha. No, and that's a good thing, right? So
Yes, yes. Well, like that guy we just had a couple months ago, like, we feel for him. We're like, man, I'm sorry, like, I can't in good faith bring you on and tell you that this is going to get $2,000 a month. Like, it's going to sit. Nobody's going to rent it. So it doesn't do anybody any good. We'd rather have that conversation up front, make sure we're on the same page, make sure we set expectations properly, rather than, oh, we'll try to pull the wool over his eyes, and then, maybe maybe he'll just stick on, or we can milk him for some fees. It's like, this is a relationship. This is not a transaction. It's not like going out and buying a tissue box or a book. It's like, this is something that we're handling your several $100,000 asset.
Right.
And we have to have a relationship to make sure that you're comfortable with what we're doing with it. And, again, whatever goal you're trying to reach, that's what we're trying to help you do.
So, in his particular case, if you don't mind me asking, did he
Yeah.
just come to terms with it and accept, like, okay, I got fleeced essentially by the agent that sold me this property, but you know what? It is what it is. I'm going to lose the $400 a month, even though I thought I was breaking even. Let's just go ahead at 1,600, or is he still kind of delusional, like, oh well, if you guys don't think you could rent it for that, I'm sure I can go somewhere else and maybe they'll rent it for 2,000. Like, what was, just out of curiosity, what was his reaction?
Yeah, no, he was very like, whoa. And we have the data, right? Like, we pulled comps. I don't know what comps that agent showed him, but we pulled the comps and said, look, here's everything in your area. And the kind of proof's in the pudding. It's in the data. We're not trying to make this up. I would love for every client to get $10,000 a month because they never leave us, right, on their property.
Right.
But I think, he was trusting that this person was going to hold his hand through this process. This was his first property. So I think he realized that you got to trust but verify. That was a hard lesson. I think a lot of new investors learn that. I don't care what their Instagram profile looks like. They might not know shit about property management or how to buy a rental or how to run a rental. So you got to be, dot your I's and cross your T's. So when we showed him this, he was like, I think it was a rude awakening. And he ended up, we just parted ways. We said, listen, we can't do this. And he's like, yeah, I can't afford to pay you guys property management. I just need to do this myself. And we were fine with that. I'd rather
Yeah.
it just be a clean break than something where we're trying to make it work and he's losing money and he's upset. So we just agreed to, like, hey, this isn't going to work. And I have no idea what happened now. We told him if we needs anything, we'd be happy to help him.
Yeah. No, I mean, that's good that you guys ended it the way you did and you were upfront about it, but it just sucks for him because, I mean, who knows? Hopefully he's doing well with it. But chances are, I'm just thinking if that were me, I'd probably goof something up and have a sour taste in my mouth and be like, the hell with real estate investing. This is a bunch of bullshit. And I would just go back to doing something else. You know what I mean? So, yeah, you got to be careful out there, guys.
Well, and you just hit the nail on the head on a huge concept that gets overlooked. You are not going to make $1 million on one deal. Most people, there are certain deals that people make $1 million, but for new people on the 3 bed, 2 bath, single family home, you're not going to retire on that one place. But you can lose your ass on one place. You can get knocked out of the game. So in the beginning, it's more about not making bad mistakes and making really good decisions. And I see people like, some of these programs or gurus, oh yeah, get it real quick, or max out your credit card and just get your first deal. It's like, if you're investing from a place of financial strength, you make much better decisions. You can weather the storm of an HVAC system or a hot water tank or a roof or a foundation. You can't do that if you're already stretched to tilt on your credit card and your credit score is 500. You're going to pay more for your mortgage. It's a death spiral. So, just be thinking about that. Base hits are great, especially in the beginning. You don't have to look for the 30% ROI property. You get a couple base hits under your belt, then you're like, okay, I've got more comfort with this. I know the area, or I know this agent, or I know this lender. I'm comfortable. Then I can start taking a little bit riskier bets.
Yeah, 100%. It's like the person that says, like, hey, which stock should I pick? And it's like, well, how about a fucking emergency fund? You know what I mean? Like, it's,
Yeah, they got a 500 credit score, and you're like, okay, dude, no, you got other shit to get in line before this happens.
Exactly. But no, we've talked about that on the show before, and I'm glad to hear you say it too, about just being able to invest and put yourself in a position of financial strength and coming to it from that angle, because there's so many people that don't, or they're looking for the next hot thing because they're hoping that somehow just miraculously waves a magic wand and changes their circumstances overnight. And it seems like nobody wants to put in the work anymore and wait the necessary time sometimes that it takes for things to cook and work their magic over time.
Yeah,
Not right away.
exactly. I mean, compound interest. I didn't make any money on my rentals for 5 years. And, I'll talk to some of these folks and they're like, yeah, I want to get in real estate investing. I'll do some classes or various things. And I'm like, well, okay, are you matching your 401k? Have you invested in your Roth account? Well, no, I'm not taking advantage of my company match. And I'm like, listen, I love real estate, but if you're getting 100% company match, you're doubling your money. That you cannot do that in real estate easily. You can do that so easily. Like, you are leaving money on the table. So don't jump to real estate if you haven't done some of the basics already. You can already increase your income by getting your company match, maybe putting some stuff away in some of these other retirement accounts, taking advantage of, I know some companies give matches in even HSAs. And if you haven't done some of that basic stuff to find free money and just sitting under your couch cushions, I wouldn't take a swing at a 200, 300, 400, $500,000 asset.
Exactly. I agree with that 100%. And yeah, being in financial services, we see stuff like that, unfortunately, all the time. And it drives me crazy. But yeah.
Yeah, because, a good rental property will return a couple $100 a month in cash flow, let's say, after everything's said and done. Maintenance, repairs, vacancy, CapEx. Once all that's out the door, if you're left with a few $100s a month, and again, I'm talking about a levered property, you're doing all right. And to make an extra $200 a month or a few $1,000s a year via your 401k, via asking for a raise, via looking for another job. There's some easy stuff, and not that that stuff's easy. Those are difficult conversations, or maybe you're capped out in your career, but those are easier things than going to find a rental property or some sort of investment that you're totally unfamiliar with. Like stocks are so liquid. It's so easy. You can put in $500, you can take out 400. Obviously, you got taxes and things to think about, but you can't do that with real estate. When you get that loan, go to get a HELOC, you got to go through a whole underwriting process, and they'll only loan you 70, 80% of the property's value. So it's very illiquid. And for people that can't manage, $50,000 a year salary, I wouldn't trust them to manage a $500,000 a year property.
Yeah, no, I agree with that 100%. It goes back to, I think, what you said about asset management and being strategic. It's like everybody needs to take a step back in their own personal life, hence personal finance show, Real Talk Personal Finance, and look at the bigger picture, because we're not saying real estate's a bad thing, but we're also, to your point, it's not like you need to jump in with both feet necessarily if the rest of your financial house isn't in order. So it's important to have perspective and take the time to step back to make sure that you are strategically doing the things and pulling the levers that make the most impact for you and make the most sense. It's kind of like the person that says, hey, I want to retire in 6 months and I haven't put any money away for retirement and I don't have any other assets and da-da-da-da-da. But oh, by the way, if I increase my contributions 10%, that'll do the trick, right? And it's like, no. You know what I mean?
Yeah.
So, yeah, it happens.
Well, and people try to shortcut it, like you mentioned. It's like they're pissed off that they planted a tree, an oak tree, and they're pissed off they're not sitting in shade in a week or two. And it's like, guys, it takes time. Let compound interest work for you. Do the basics first. And yeah, I think, everybody loves going to a cocktail party and talking about a rental property they bought, right? Or, oh, I'm having trouble with this. But I'd rather be rich over looking rich, right? I'd rather actually be rich. And I think that, you have to take a step back and make sure you're doing the fundamentals right. And once you've got your financial house in order, your P&L looks good, that's when you can invest from a place of strength. And again, I do love real estate. I don't think it's as attractive today as it was 7, 8, 9 years ago, but it still does make sense long term.
I agree with that. What else do you think would be important for the listeners to know, or anything we didn't chat about that you want to, impart some wisdom on them on, whether it's real estate or personal finance or investing, or any big tips or, things not to do?
Yeah, I think the thing we hit on there at the end, especially for a personal finance show, it's like, make sure you're going to invest from a place of strength. I see a lot of people wanting to get into new things, and I was guilty of it too. It's like, ooh, this shiny object, real estate's making a lot of money. I read Rich Dad Poor Dad. I can retire off a few rental properties. You get that allure, or you get bored in your job and you're like, okay, I want to do something else. Well, sometimes effort doesn't actually equal return. You can actually hurt yourself by doing it. So you can think, oh, okay, I'm going to these networking events, I'm doing this stuff, I'm getting into real estate, and it can actually maybe not be the best financial decision for you. So I think it goes back to, starting from a place of strength. Once you get into it, make sure you're building a phenomenal network of people. Do not go with a bunch of newbies who know nothing. It's fun to be with people like that when you're talking about the deals you're analyzing and how you're figuring stuff out. But when you actually hire somebody to do something, whether that's a property manager or a lender or a personal financial consultant, anybody, loan officer, make sure, especially in the beginning, you're finding people who are super experienced and have done what you're trying to do. And then I guess the last thing I would say is just, be weary of the financial gurus. Anybody who claims to be one, or they've got a really cool Instagram page and they're talking about how they work, a couple times a month or a few hours a month, I would probably, just be very, very careful with that. There's a lot of people out there that look successful or act successful that don't know anything or know very little, and then you only find out, maybe a year or 2 years later. And in real estate, unfortunately, or fortunately, I guess it depends on which side you're on, it has a very long feedback loop. Meaning, when you put a tenant in place, there was a tenant I put in. I can tell you the address, 7511 Marisol Drive, because this haunted me for several years. I put a tenant in there, rented very quickly, put a sign in the yard. I was doing this all myself at the time. This is one of my first few properties, and paid rent on time. Everything was great. I didn't hear from him. Never put in a maintenance request. And I thought, man, I'm pretty smart. I've got this thing figured out. And then I started reading about making sure you do an annual inspection and looking at that and digging into that. And I'm like, okay, so what we're going to do is we're going to do an annual inspection on every property. So I sent the guy a message. Hey, going to do an annual inspection. It's coming up and, I want to do it over the next couple of weeks. What time do you have available? That's it. I never heard from the guy again, ever. Went over to the house and he had torn out the ductwork, and it was a marijuana grow house. And man, every door had like the number of plants written on it. There were lights left in there, but I never heard from the guy again. I called the police and said, hey, this was I don't have any plants in here, but I can smell it. It's very easy to see this. And the house is destroyed. And he said, do you have the guy's driver's license? I said, yeah. And he said, well, you might want to just try to get a hold of him or they basically said, if you can't get him to come back, which, I mean, God, they're stupid, but they're not that stupid. You're SOL. And so they didn't do anything. They did nothing. I had the guy's driver's license. I went through the credit background check. He came back clean, and I was sitting there dealing with a house that cost me $15,000 to get fixed up. So the reason I tell that story is because for about 7, 8, 9 months of that lease, I thought I was the smartest guy on the planet. I thought I had the perfect tenant, and I found out that was a whole big mistake. So when you hire people, trust but verify. I think it goes back to your point about ask the questions. Good property managers or good people on your team will be okay with you asking the questions. You give them they'll tell you how the machine is working and why it is the way it is, and the recipe. And good people will do that, and they'll want to educate you. The people that are upset with that, usually, I shouldn't say usually, sometimes or have something to hide, or maybe they don't even know why they're doing it. They're just copycatting somebody else. So just be wary in real estate. It's a lot longer feedback loop. It's very illiquid. It is a phenomenal thing for long-term investors, but I do think more people would find a lot of benefit in, just taking care of their own financial house, investing in stocks, making sure they get their company match, their IRAs set up. And then after you do that, then you look over to real estate.
Got it. Where can people, and thank you for sharing that story, by the way, that might make the teaser clip on the intro. Where can people find out more about you and connect with you if they're interested?
Yeah, I just go to emersonpropertymanagement.com. If anybody has a house they're trying to sell and can't sell it, we've got a free accidental landlord guide. If you want to know about what your property would rent for, we've got calculators on there. So a lot of this is tailored to Houston. It might be applicable to some of your markets, but just be mindful of that. But a lot of free content and resources on there, or you can just search my name online, and we've got all sorts of freebies.
Awesome. All right. Well, Cameron, thank you very much for coming on to Real Talk Personal Finance today. We appreciate the time, and I think the listeners really like this one.
Hey, thank you, sir. I appreciate you having me on, and really impressed by what you're doing out there.
Thank you.
Check the mic and make sure it sound right, boys.